All right, welcome to Talk Tickers. Today we're diving deep into Bloom Energy's Q3 2025 earnings. And folks, this was a big one. The results were so powerful they completely changed the narrative around the company. So let's get into it and figure out exactly what happened.
So, here's how we're going to break it down. We'll kick things off with a big earnings beat that really caught everyone by surprise. Then we'll get into the main event, how Bloom is positioning itself to power the AI revolution. After that, we'll look at their guidance and a really cool tech advantage they have. We'll check out the market's wild reaction, and finally, we'll wrap up with our take on what to watch for in the next call.
Okay, first up, the Q3 earnings beat. And let me tell you, this was a decisive outperformance. These are the numbers that really lit a fire under the stock after hours. Get this. Revenue for the quarter came in at a record-breaking $519 million. Now, to put that into perspective, the Wall Street consensus was sitting way down at $421 million. So, we're not just talking about a small beat here. This was a blowout, smashing expectations by almost $100 million. Just incredible. And that massive revenue number, it translates to a staggering 57.1% year-over-year growth. I mean, wow. In a market that's hungry for growth stories, especially in something like energy infrastructure, that kind of acceleration, well, that's exactly the kind of thing that gets everyone's attention. And the good news didn't stop at the top line. Not at all. It flowed right down to the bottom. Non-GAAP EPS hit 15 cents. You know what the street was expecting? Just 10 cents. So that's a 50% beat. That right there shows you they're not just selling more, they're making money more efficiently as they scale.
So let's put this all together. As you can see, this was just a clean sweep. It was a beat across every single important metric. Yeah, the revenue and EPS numbers are the headlines, but look at the margins. Non-GAAP gross margin expanded by over 500 basis points year over year. And operating income, it went from just about $8 million last year to over $46 million. That is what you call powerful, profitable execution. Okay, so the numbers are obviously fantastic. But what's the story behind the numbers? What's driving all this? Well, it all comes down to a really critical shift in the narrative. Bloom is no longer just a green tech play. They're becoming mission-critical infrastructure for the AI revolution. And you don't have to take my word for it. The CEO, K.R. Sridhar, said it himself. He said Bloom is at the center of a once-in-a-generation opportunity. He's making it clear this isn't just about one good quarter. This is about tapping into a massive, fundamental shift driven by AI's absolutely relentless need for more and more power. So how are they tackling this massive opportunity? They have the strategy they call the Lighthouse Playbook. It's actually pretty brilliant and straightforward. Step one, you land a huge respected lighthouse customer in a new sector. Think AT&T in telecom. Step two, you go in there and you just knock it out of the park. Prove you can scale. Step three, you take that success story and use it as a case study to win over all the other big players in that same industry. And step four, you become the go-to standard. And based on these results, it looks like they're running that exact playbook in the AI world right now. And it is working. And boy, is it working. I mean, look at this. They have now penetrated seven different parts of the AI ecosystem. We're talking the big dogs, the hyperscalers, the colocation providers like Equinix, even infrastructure owners through that massive Brookfield partnership. They're not just landing one-off deals. They're embedding themselves across the entire value chain. It's a systematic takeover, not just a lucky break. All right, so with all that incredible momentum, you have to wonder, what's next? Well, let's look at what management is guiding for, and then we'll get into a really interesting tidbit from the Q&A that shows just how future-proof their tech really is. So on paper, management just reiterated their full-year guidance. But here's the kicker, the part you really have to listen for on these calls. The CEO came out and said, and I'm quoting here, "Based on what we see today, we expect 2025 to be better than our previously stated annual guidance." Now, for anyone who follows these things, that's not just a casual comment. That is a huge wink and a nod to Wall Street. It's basically saying, hey guys, the numbers we put out there, they're conservative. Things are accelerating. Okay, now this was maybe one of the most important moments of the whole call. During the Q&A, an analyst asked a super technical but absolutely crucial question. They asked about the big shift happening in data centers, moving from 400-volt AC to 800-volt DC power to handle the next generation of AI chips. And the CEO's answer was just perfect. He basically said the old AC power systems are just a band-aid. They weren't built for this. But Bloom's tech? It's native DC. It was built for this from the ground up. He used this brilliant analogy, saying it's like, we were making color TV images, the world was only consuming black and white. What he's saying is, the future that everyone else is scrambling to adapt to, Bloom is already there. That gives them a massive, massive head start. So you've got a massive beat, this incredibly powerful AI story, and a huge tech advantage. What do you think the market did? Yeah, it exploded. This is what we call a re-rating, the market fundamentally changing how it values a company. Just look at the numbers. The options market, which is basically the betting market for stocks, was pricing in a pretty big move of around 12.7%. But what actually happened? The stock ripped 20% higher in after-hours trading. Whenever you see the actual move blow past the expected move like that, it tells you one thing. The market was genuinely shocked by how good these results were. And this one-day pop isn't happening in a vacuum. Let's zoom out. The stock is up something like 410% for the year. That's crushing the broader clean energy sector. And this gets to the most important point. The entire thesis has changed. The market isn't looking at Bloom as just another green tech company anymore. It's now being valued as mission-critical AI infrastructure. And a huge catalyst for that was that game-changing $5 billion partnership with Brookfield. Okay, so where do we go from here? With all this information, let's put on our analyst hats and try to build a case for what the future holds. Putting it all together, the blowout quarter, the killer AI story, that tech edge, the clear rating here is outperform. It's hard to see it any other way. The company is just positioned so well to beat the market. And with an outperform rating comes a price target. Our talk ticker's target is $160. And why so high? Because the thinking is that the market is still just waking up to how massive this AI power demand really is and how perfectly Bloom is positioned to capture it. So, to wrap up our outperform thesis, it really stands on 4 solid pillars. 1, AI power demand is not a fad, it's a huge multi-year tailwind. 2, they've proven they can execute and scale profitably. 3, that Brookfield deal de-risks the whole financing picture and locks in a massive pipeline. And 4, their native DC tech is a genuine, durable advantage that future-proofs their business. It's a really compelling story. So I'll leave you with this question. Is this massive run-up the end of the story, or is this re-rating from green tech to AI infrastructure just getting started? That's what investors have to figure out now. And of course, this is not financial advice.